Hello traders, and thank you for stopping by to watch this video analysis. I am a swing trader using only supply and demand and price action to implement my multi-day or even multi-week swing trades. I believe in this way of trading because I want to trade in the direction of the big institutions, big banks, and hedge funds because they are the ones moving the markets. I want to identify where and when the market is most plausible to reverse to either the upside or the downside. These big institutions are leaving their large footprints where they placed their orders, and we are going to locate their unfilled orders left on the charts and trade with them. Let's go. Alright, let's look at some charts here. Today we're going to look at CGC, Canopy Growth stock. On the weekly, we can see that there's a supply zone here. It's a very wide and it's been penetrated multiple times, so it could break this zone over time. And then there's a demand zone here that's holding. So it's been bouncing up and down between this range here. On the monthly, we have, let's see, it's a little too small to see. Okay. Alright, so we have a supply zone here. So the stock overall is in a supply zone. So no buying here because it's too high in the range up here. On the 3-month chart, it rallied, dropped, and a rally. So prices right here is too high up even on the long-term chart, so we should not be buying right now. Just hold until it either breaks above the supply zone or drop down to the lower demand zones. Next stock on the list is CRON Group, CRON. In this stock, we see that on the monthly, it rallied and then it lost its ability to go up higher and it dropped down. This is a demand zone that it broke, so I'm going to draw a transparent square, and there's supply zone up here that it doesn't look that strong, but we'll see. And there's demand zone down here. So if price ever drops down here, we can think about going long if everything is still the same at that time. And on the monthly, there's a demand zone down here. So it's a pretty good chart to go long if price ever gets down there. On the 3-month chart, price is rallying, and you can see this bearish pin bar that formed. That means there's excessive sellers up there, that there's like a lot of selling pressure up here. And on the monthly, you can see this bearish candle, bearish closes. So it means that price is dropping, and if it drops down here, we could think about going long. Maybe on the daily chart. Yeah, because this is the same demand zone, so price can get down here, then we can think about going long. Alright, the last stock we're going to take a look at is Tilray. Tilray is an absolute mess. Looks like a penny stock, but okay, so we could see that back in August of 2018, it rallied and then it lost its ability to go up higher, and it's dropping. So at the beginning of this big move, there's a demand zone, and even on the monthly, there's a doji candle that's formed a demand zone. And then on the 3-month chart, we saw that price went up to about $300, and then there's excessive selling pressure, dropping it back down to $44. So this chart, it looks like long term is not really a good chart to trade, but if we take a look at the lower time frame, like the daily, yeah. So if we look at the origin of the move on the daily, it's not very strong. So this is one of those charts where I need to see more strength at that point to buy. So if price ever gets down here, I would say that it needs to be validated before we can go long. And that's it. Thank you for watching. Thank you so much, traders, for taking the time to view this video. If you like this video, please hit the thumbs up button, and if you want to see more, please don't forget to hit the subscribe button and the bell notification so you don't miss any new videos that I upload in the future. Thank you and have a great day.